So I want to talk about the major difference in traditional and Roth IRAs, and there are a few. Anybody who's watching this video and you want to know what it would be like to have a Roth IRA rather than a traditional, give me a call and we can do a mock Roth conversion for you just so you can see what it would be like. With the traditional IRA, you are taking taxes out when you make a withdrawal. So let's say you have your 401k, you leave that company, you decide to roll your 401k into a traditional IRA. When you start taking withdrawals, that's when you'll start taking taxes. With the Roth IRA, you pay taxes and then you invest the money. They actually have Roth 401ks in a lot of companies now, so rather than the money going tax-free into your traditional 401k, you can choose to have taxes withheld, and then they'll put the money still directly into your Roth 401k. But that's the difference, is it's before tax versus after tax money. If you put after tax money into a traditional IRA, which is very common, especially with tax time coming up, you get a tax deduction. You do not get a tax deduction for investing in your Roth IRA, and the reason is because when the money grows, it is tax-free. And then when you withdraw, it's also tax-free. Also, Roth IRAs, you do not need to take a required minimum distribution, such as you do through a traditional. So when you hit 70 and a half, a traditional IRA means, or a 401k even means, if you're not working, you're going to have to start taking money out of your accounts. And that percentage depends on a chart that the IRS put out for everybody, and it goes up every year. And with the Roth IRA, you don't have to deal with that. So that's one of the benefits. So what's the best way to go? Well, with a traditional IRA, you can look at it two ways. With a traditional IRA, it's going to go up faster. It's going to go up further. And the reason is because the money has never been taxed. However, you will have to deal with the taxes eventually. So if you think your income is going to be lower in the future, the benefit would be my tax bracket now is 25. I think my tax bracket when I retire is going to be 15. So the traditional IRA works out perfectly. In terms of a Roth IRA, it's all your money. You don't have to worry about taxes. You don't have to worry about the RMDs, and your beneficiaries don't have to worry about taxes, which is the other great thing. A traditional IRA works all the same in the sense that you have a beneficiary, they're going to have to pay taxes. So again, it's a personal situation at the end of the day. If you'd like to know what your conversion would be, if you're wondering what a Roth would look like for you, just give us a call or message me or shoot a comment below, and I'm happy to help.